In today's video, we will discuss about one more good performing mid-cap fund, but unfortunately it is not that popular. Yes, I am talking about Kotak Emerging Equity Fund. Here we will check its performance using real data, and by the end of the video, we shall be able to know why this fund is not so popular and also compare it with a 5-star rated Axis Midcap fund and decide whether to continue with this fund or should switch to Axis Midcap fund. If you have not seen my detailed review of Axis Midcap fund, you can check it also. Video link is attached in the card above. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. To start with, we all know that Kotak Emerging Equity Fund is a good performing fund in its category, that is midcap category. Here we will be taking into consideration data of direct plans only. Firstly, let's look at the basic details like AUM, that is total asset under management, which is around 18,600 crores, which is okay for a mid-cap fund. While the expense ratio is 0.47%, that is less than half a percent and quite low as compared to other schemes. The benchmark index, that is the reference against which the scheme is compared, is Nifty Midcap 150. Now let's look at the sector-wise allocation. From the table, it is very clear that the fund is equally invested in finance, material and consumer, while little more allocation is given to capital goods. Quite a good performing mid-sized companies form a part of these sectors, and when compared to its benchmark, its allocation is little different, but equal allocation across sectors provide good and consistent growth. Schaeffler India, Thermax and Cummins are the main stocks of the capital goods sector, whereas Supreme Industries is the major contributor in material sector and Persistent System is from the technology sector. Here also the stock selection looks good. On checking the portfolio allocation, it is evident that the mid-cap shares form around 80% of the portfolio, whereas large-cap shares form other 16% and only 4% is allocated to small caps. With above allocation, the fund is able to provide a good return with more risk, as generally mid-cap stocks are considered riskier than large-cap stocks. When compared to the Axis Midcap fund, the mid-cap share allocation is only 64%. Hence, can be assumed that the risk in Axis Midcap fund is less than that of Kotak Emerging Equity Fund. This may not always be true, and we will see in the technical analysis where we will compare their parameters. The portfolio allocation is quite good for long-term investment for investors who don't mind taking little more risk. Mr. Pankaj Tibrewal has been managing the fund since January 2013, that is more than 9 years, and that too very efficiently, and hope that he continues in future also. Here, this long-standing association of the fund manager with the same scheme is quite positive and advantage for the scheme. So now let's check the trailing returns and compare with its benchmark and category. On comparing the trailing returns for 3 months, 6 months, 1 year, 3 years, 5 years and 7 years, it is able to beat the benchmark and category. May not be with very high margin, but the fund has been consistent in outperformance for the entire period, which is quite good. Now let's compare its trailing returns with Axis Midcap fund. Here you can see that it beats in all the period except for the 5 years return. This consistent performance of the fund is a very positive side, and investors in this fund need not worry about the performance of the fund. Let's now see the rolling returns for 5 years, 3 years and 1 year. Here the fund is able to beat the index most of the time, which is quite good. When compared to Axis Midcap fund, it is around 50-50. So broadly, it can be concluded that the fund's performance is better than the category, whereas it is as comparable to the Axis Midcap fund. As it is not very conclusive from the trailing and rolling returns, which fund has better performance, let's also check the actual SIP returns for a SIP amount of Rs 1000 monthly for a period of 9 years. Here also, the return of Kotak Emerging Equity Fund is marginally higher than that of Axis Midcap Fund, but the difference is negligible for a period of 9 years. Now let's see how the fund performs on risk parameters. Here we compare the parameters with the benchmark index and the category average. First one, the mean return, that is the average return in a year, which is 24.8 and is more than that of category and benchmark. Here higher the value is better. Second, standard deviation. That is a tool to measure how much the fund has deviated away from the mean return, which in this case is 24.06, which is less than the index but more than the category average. Here, lower the value is better. The third one, Sharpe ratio. That is a tool to measure the risk adjusted return, which is 0.88, which is more than benchmark and category average. Here, higher the value is better. The fourth one, beta. That is the volatility of the scheme compared to the benchmark, which is 0.96, which is more than that of the category average. Here, the lower the value is better. The fifth one, alpha. That is a tool that measures how much better the fund has performed compared to the category. Here, it is 2.57, which is far more than the category average. Hence, it can be concluded that the fund is able to generate better returns than its benchmark and category, but with a higher standard deviation and more risk. Now let's compare the risk parameter with that of a Axis Midcap fund also. When comparing with Axis Midcap fund, it is not able to beat any of the parameters except for the mean return. Now let's see the upside and the downside capture ratios. The upside capture ratio is the measure of how the fund performs relative to the index during the period when the index rose. Here the value is 108, which indicates that the fund outperformed 8% more than the index during this rise period. Here, higher the value is better. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 88, which indicates that the fund declined 88% as compared to the index during this fall period. Here, lower the value is better. Now let's see the risk return graph. Here on x-axis, we have standard deviation, whereas on y-axis, we have total returns. It is very evident from the graph that the fund has better total returns with more standard deviation as compared to the category average, which indicates that the fund has been able to generate better returns with more volatility compared to the category. When compared to its index, the fund is able to generate better returns with almost same volatility. So now coming to the conclusion, what investors should do. First, the existing investors should continue the investment as the fund's performance is quite good. But keep in mind that this comes with a little more volatility and risk. In my opinion, one should not switch to Axis Midcap fund as the returns of the both the funds are almost the same, and also the performance Axis Midcap fund has been not that good for last 1 year, which is another concern for Axis Midcap fund. For new investors, they can start new investment as it's a good and a consistent performing fund. But keep in mind that the return comes with a little more volatility, so invest only if you are planning for a long term. Do share your opinion and views in comment box about the switch to Axis Midcap fund or not. I would like to add that I have both the funds in my portfolio and I am not planning to change any of the schemes till my next review. I will again try to review this fund after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you are not done till now, and also press the like button. Do check my older videos. Click the attached cards to watch the videos. Thank you.